Iwan Azis is the head of Office Regional Economic Integration at the Asian Development Bank, and he joins us this morning from Singapore. Good to have you with us, Mr. Aziz. I guess let's talk about the sovereign reaction to this S&P downgrade, because we have South Korea saying they're sticking to U.S. Treasuries. China, though, coming out with some criticism, saying that the U.S. has to fix its addiction to borrowing. Your reaction?
Well, many of these are nothing new because market has already taken into account what's going on in Washington and in Europe. I think if there's anything significant, it is going to be the psychological effect of the market. But the market is one thing, but another thing is what is more serious is really the possible impact on the real sector, on the Asian economy, especially the export sectors. You know, the fact that the U.S. economy will be slowing down, and U.S. is still the largest market of the final goods export from Asia, and then also the high probability of the continued weakening of the U.S. dollar, which also mean the strengthening of the currency in Asia. That also is not so good news for the export.
Okay, so basically you expect Asia sovereigns to hold on to their U.S. Treasury holdings, right, before move on?
That's right. That's right.
Okay. Now, let's talk about the implications for Asia because of this S&P downgrade. You know, some are saying that borrowing costs are going to go up for the U.S. What does this mean for, I guess, the nations that want to export to this country? What's the fallout?
Well, the fallout is that for export-orienting economies like, Thailand, Korea, Taipei, China, and so forth, it's not really a good development for their export prospect, because this not just the slowing down of the U.S. economy, but also the strengthening of their currency vis-a-vis U.S. dollar. So one thing about what happened in the portfolio market, and that is the market reactions, which I think it's going to be highly uncertain. But more importantly is also what's going on the real sector of the impact of the Friday decision by S&P.
Okay, well, you know, Asian sovereigns have actually been buying U.S. Treasuries in order to protect their currencies from strengthening against the U.S. dollar. In this case, because of the uncertainty with the U.S. currency and maybe some flow outwards, do you think there might actually be some additional buying by countries of U.S. Treasuries?
No, we are not making such predictions. I think what will happen is we are even sort of in a position to predict that the capital flows coming into the regions will continue, and that will at least put further pressure for the regional currency to strengthen, which also means bad news for export. So that is the reasons why we are more worried about the prospect of the export from Asia.
Okay, do you think there are better safe havens here in Asia? Would you advise buying maybe Chinese sovereign debt or maybe Japanese debt?
Well, in general, there's no heaven in the earth now, because it's really the U.S. Treasury has been traditionally the most important safe haven. And as I indicated earlier, I don't think there will be a major shift in terms of the preference of the market in terms of considering the U.S. Treasury as a safe haven. I think it is still a safe haven, and after all, it's only one notch down.
That's right, and it's only Standard & Poor's, by the way. We have Moody's and Fitch, again, reiterating its AAA rating on U.S. debts. Thank you for your time this morning, Dr. Iwan Azis of the Asian Development Bank, joining us from Singapore.